Startups and unicorns have gained popularity in India over the last couple of years. Now, 2021 turned out to be a truly fantastic year, with India becoming the third largest startup ecosystem, only after the US and China. However, India added fewer unicorns to its list this year, as the number of businesses valued at $1 billion or more decreased by more than half from the previous year. Now, according to Traction Geo Annual Tech Report, 22 companies turned unicorns this year compared with 44 last year. Now, the slowdown is being influenced by a number of reasons. A rise in inflation and interest rates that followed the surplus liquidity and easy credit is making it more challenging to finance companies. Now, unstable geopolitical conditions and the weak IPO market are also other factors. Given the current financing environment, it is hard to predict how long the slowdown in funding will last. But one thing is for sure, that the stakeholders are being more careful and cautious in deal making. Now, we think the Indian startup story is robust and resilient that can withstand the slump. But we do believe that the so-called winter is a chance for Indian startups to focus on profitability. It will also assist to weed out the market, leaving only the strongest firms standing, making the entire startup ecosystem much stronger. Fiscal year 21 was a fantastic year for India's merchandise exports. But after achieving a record export target of $418 billion in fiscal year 22, India's merchandise exports are now moderating. In October, exports decreased 17% to $29.78 billion, and this was the first time since February 2021 that monthly exports fell below the 30 billion barrier and decreased year over year. In November, India's exports rose a mere 0.6%. While exports barely rose in November, imports rose 5.4% to $55.9 billion. Now, despite the pace in import growth outpacing that of exports, the trade deficit fell to $23.9 billion in November, the lowest in 7 months. Now, the data for October reveals that India's exports were not immune to the effects of the slowdown in major economies brought on by the conflict in Russia and Ukraine, rising energy costs, inflation, and monetary tightening in major economies. Now, the WTO Goods Trade Barometer, a global trade composite indicator, reflects the same sentiment seen in India. The most recent reading indicates that trade growth would probably decrease in the last months of 2022 and continue to be modest in 2023. Now, the barometer showed a reading of 96.2, lower than the baseline value of 100, which indicates slower trade growth going ahead. Now, given the likely continued weakness of global growth, India's exports are expected to remain sluggish going forward. But unlike other growing economies in Southeast Asia, India does not rely heavily on exports. However, strengthening the export industry is essential for sustaining growth, particularly given the market confidence surrounding India's manufacturing growth story. So, what does these news mean for you? We believe that the slowdown in startup funding is just temporary on the back of macroeconomic headwinds. Now, despite these obstacles, India's startups ecosystem still remains one of the most promising markets globally, with immense potential for growth. The country boasts a huge population of tech-savvy youth who have been driving innovation and will continue to do so, backed by reforms. This news will have an indirect neutral impact on you. In the short term, India's export prospects are now uncertain due to the macroeconomic climate. However, we think India's exports would be on the rise once the global headwinds eases and the policy initiatives takes shape. This will have an indirect neutral impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.